हेलो एवरीवन, आप सभी का फिर से एक बार स्वागत है मेरे यूट्यूब चैनल में जिसका नाम है कॉमर्स ट्रेजर। इन दिस वीडियो वी आर गोइंग टू कंटिन्यू अवर डिस्कशन ऑन KSET and NET upcoming questions of Q20 series. I have already made 4 part of this series. If you have not seen those 4 part, I will be putting the playlist in the description as well as in the I button to watch those videos. And let us go to the today's video. X bank acquires Y bank. It is a case of vertical merger, horizontal merger, conglomerate merger, all of the above. Now, whenever two similar business are merged together, it is called as horizontal merger. In this case, X bank and Y bank are similar business, therefore it is an horizontal merger. Vertical merger is nothing but whenever a bank and an insurance company, if they merge together, then it is called as an vertical merger. In simple, vertical merger is nothing but when two different units of the same business line meets together or merges together. Conglomerate merger is nothing but whenever two dissimilar business are going to merge with each other. I've also made a video on recent merger of banks in India, which is also very important from the upcoming exam point of view. I'm also putting the link in the description as well as I button of recent banks merger in India. Do watch that videos. I have given a lot of information about the mergers which happened last year in 2020. Working capital to total asset ratio is used in calculating profitability, predicting industrial sickness, deciding about managerial appointment, none of these. So correct answer is predicting industrial sickness. So in computation of Altman Z score, it is one of the ratio which we are going to use. White knight is a form of merger, takeover defense, wage payment, none of these. So white knight is a very popular form of takeover defense. It is nothing but whenever a company tries to make an hostile takeover, then the company which is under the radar contacts its friend or friend company to make a counter offer and take over the company, which is called as white knight. SDR stands for. So SDR stands for special discount rate, special drawing right, special dividend right, none of these. So it stands for special drawing rights. So International Monetary Fund, that is IMF, which was one of the twins of Bretton Woods Conference along with World Bank, makes use of its own type of currency, that is an artificial currency which is called as SDR. The SDRs were first started in the year 1969 and these are used as international reserves by the member countries of IMF. The laptop bag price is rupees 1500 in India at $30 in US. The exchange rate between Indian rupee and US dollar as per absolute PPP theory will be. So as per absolute PPP theory, spot rate, that is the present exchange rate, is nothing but PH divided by PF, where PH refers to price of a product in home country divided by price of a product in a foreign country. So home country in this case is India. So price of that product in India is rupees 1500 and price of the product in USA is $30. So when we divide this, 30 ones are 30 50s are, $1 is equal to rupees 50 should be the exchange rate as per absolute PPP theory, which is option number A. Unpublished sources are primary source, secondary source, both A and B, none of these. So right answer for this is option number B, secondary sources. So data are of basically two sources. One is called as primary source. Primary source is nothing but whenever you are collecting the data for the first time, then it is called as primary source. There are different techniques by which you can collect primary source data. Few of them are interview, then we have experimentation, observation, questionnaire, schedules, etc. And the second source where we can collect data is secondary source. Secondary source is a source where already collected data is present, but these data are collected for some other purpose. So primary data and secondary data you have to remember, and secondary data again is divided into two sources. One is called as published sources. In published sources we have records which are maintained by government, which may be the central government, state government or local government. Then we have records maintained by all the important institutions, like it may be SEBI, it may be RBI, it may be different industrial as well as company related databases, etc. And unpublished sources are nothing but which are not published anywhere, which includes mainly diaries or logbooks in companies, or it may include unpublished autobiography of persons, some records which are not published by companies, etc. Type 1 error is a decision of accepting null hypothesis when it is false, rejecting null hypothesis when it's true, both A and B, none of the above. So very simple way of remembering type 1 and type 2 error is this chart. Whenever H0 is true and you accept H0, then there will be no error. Whenever H0 is true but you reject H0, then it is called as type 1 error. Whenever H0 is false and you accept H0, it is called as type 2 error. And whenever H0 is false and you reject H0, then it is called as no error. So in this case, they are asking type 1 error is, it is when H0 is true but we reject H0, that is option number B. Type 1 error is also called as alpha and type 2 error is also called as beta. This alpha is also called as level of significance. Median test is a parametric test, non-parametric test, both A and B, none of the above. So median test is a non-parametric test. Non-parametric test is a test which does not use any parameters like mu or standard deviation or x bar, etc. Parametric tests are tests which make use of mu, standard deviation, x bar. Examples of parametric tests are Z test, T test and F test. Example of non-parametric tests are U test, H test, chi-square test, median test, etc. Chi-square test is developed by Carl Pearson, Kruskal-Wallis, Will Coxon, all of the above. So chi-square test was given by Carl Pearson, who has also given the formula for correlation. Kruskal-Wallis has given H test, which is also a non-parametric test. Will Coxon has also given a non-parametric test which is called as Will Coxon rank sum test, which does not uses any parameter but it makes use of median. The concept that sum of the whole is greater than individual part is known as value addition, synergy, margin, system advantage. So it is called as synergy. Synergy is nothing but it is of the principle that if 2 plus 2 is added, it does not become 4 but it becomes 5, and the gain which we are getting extra is called as synergy. So it is done whenever we are going for merger. Present value of the merged firm, that is if A and B are the merged firm, then present value of A and B is going to be equal to present value of A plus present value of B plus the value of synergy. So therefore, if we have to find out the value of synergy, synergy is equal to present value, that is value of A and B together, minus individual value of A and individual value of B. The concept of value chain analysis was introduced by Michael Porter in the year 1985, 86, 87, 88. So it was introduced in the year 1985. So Michael Porter has given some activities which he has divided into two types. First type is called as primary activities, which are the main activities in the business, which mainly includes inbound logistics, which is nothing but purchasing of raw materials and everything, operation, which is nothing but manufacturing, outbound logistic, which is sending the goods to warehouse and transportation, then marketing and sales, which includes selling, and lastly it includes services. So these are the major primary activities which comes under value chain analysis, and there are few support activities which are also present in value chain analysis, which includes finance, HR, marketing, etc. When the price of commodity decreases from 10 to 9, the sales increase from 1000 units to 1500 units, marginal revenue is. The formula for marginal revenue is change in total revenue divided by change in quantity. Total revenue is nothing but price into quantity. So therefore, change in total revenue is equal to new revenue minus old revenue. So let us compute the new revenue. New revenue is 9 rupees price into 1500 units minus old revenue is 10 rupees price and 1000 units. So 15 nines are 135. So 13,500 minus 10,000. So revenue has increased by rupees 3,500. And change in quantity. Change in quantity is equal to 1500 units minus 1000 units, that is 500 units. Therefore, marginal revenue is going to be 3500 divided by 500. 500 ones are 500 sevens are, that is rupees 7. Option number C. A firm has 20% debt and 80% equity in its capital structure. Cost of debt is 10% and cost of equity is 15%. What is the overall cost of debt? So overall cost of debt, that is KO is equal to summation of I is equal to 1 to n Wi into Ki, where Wi stands for weight and K stands for specific cost of capital. Therefore, overall cost of capital is 20% debt into 10% is the cost of debt plus 80% equity into 15% is the cost of equity. So 20 into 10% is 2 and 80 into 15%. So 80 into 10% is 8 and half of this, that is 80 into 5% will be 4. So 8 plus 4 is equal to 12. 12 plus 2 is 14%, which is option number B. Major source of new product ideas include all of the following except competitor, government, internal sources, customer. So you get ideas for new product from competitors, definitely yes. Internal sources, which includes your employee, sales manager, sales executive, etc., definitely yes. And customers are the main source of getting idea. So government is not the major source of getting new product ideas in marketing. One of the following is not a type of marketing concept. Already we have discussed that there are 6 different types of marketing concepts. Production concept, definitely it is a type. Selling concept is a type. Societal marketing concept is a type. Supplier concept is not a type of marketing concept. So apart from this, we have product concept, which is also important. Then we have marketing concept and we have holistic concept, which is inclusive of all the concepts. Which one of the following sets represents 4 C's of marketing mix? So earlier we had 4 P's of marketing, which were price of the product, then we had promotion, and we had place. Now these 4 P's have been replaced by 4 C's, where price has been replaced by customer's cost, product has been replaced by customer's solution, promotion has been replaced by communication, and place has been replaced by convenience. So option number A is the correct option. Whatever product we produce now is for solution of customers' needs. Whatever price customer is paying is the cost for the customer. Whatever promotion we are doing is through the way of communication to the customer, and place, which was earlier P, is now replaced by convenience because of online marketing. The 2 main softwares are operating and application, transaction, strategic, none of the above. So operating software and application softwares are 2 main type of software. Operating software examples are Windows, then Linux, Android is an example, Mac is an example of operating software. And application software examples are MS Excel, MS Word, PowerPoint, and so many applications which we use. Loans of very small amount given to low income group is called as cash credit, micro credit, simple overdraft, rural credit. So loans whenever are given to very poor people or people of low income group which do not have any collaterals or securities to give, those are called as micro credit. Cash credit is nothing but it is a way wherein companies get short term working capital requirements by banks and they have to pay interest only on the amount which they are withdrawing from the account. Simple overdraft is a facility given to the current account holders wherein they can withdraw more amount which is present in their current account. Rural credit is credit given to the rural people for agriculture and related activities. Which of the following organization is specifically set up to boost overall rural development in India? So whenever we talk about rural development, it is NABARD, which is National Bank for Agriculture and Rural Development, established in the year 1982 on 12th July, and headquarters of NABARD is in Mumbai. RBI is a central bank of our country. I have made a special video on RBI in which we have discussed questions like which is the animal and the tree present in RBI logo, where was the first headquarters of RBI, when was RBI established, when did it got nationalized, what was the initial share capital of RBI, and so many related questions. I'm putting the link in the description as well as in I button. Do watch that video. It is also very important from the upcoming NET and KSET exam point of view. SIDBI stands for Small Industrial Development Bank of India, which was established in the year 1990, and already we have discussed in previous video about SIDBI. And SEBI is Securities and Exchange Board of India, established in the year 1988, but it got its statutory status in the year 1992, and it became the controller of the stock market in India. The consumer purchases 10 kgs of sugar when his income is rupees 1000, and the same consumer purchases 12 kg of sugar when the income goes up to rupees 1100. The income elasticity of demand is. So income elasticity of demand is computed using the formula change in quantity divided by quantity into income divided by change in income. So change in quantity is computed using the formula Q2 minus Q1. The new quantity is 12 kgs and the old quantity is 10 kgs. So change in quantity is 2 kg divided by the old quantity was 10 kg into the old income was 1000 rupees, and change in income is nothing but y2 minus y1, that is the new income 1100 minus old income which was 1000. So change in income is 100. So 0, 0, 0, 1, 2, 3 zeros gets cancelled. So income elasticity of demand is 2. That is option number B. So this concludes another set of 20 questions of Q20 series. Any comments regarding to this video? You can comment me in the comment box. If you have not subscribed my channel, do subscribe my channel and also press the bell icon so that you can get a notification as soon as I upload a new video. Thank you and meet you all again with another video.